And we are live. I want to make today's video because, excuse me, there's some big news happening right now in the mortgage market here because rates or average rates decreased below 7%. The first time that's happened since early April this year. So average rates right now are around 6.99% according to the Mortgage News Daily. And this is actually my first video I made, or I've been making on for a live stream in the morning hours. Hey YouTube, how you doing? Nice to see you here. Pros, woot woot, nice to see you. Thank you for joining me. But what I was saying is that this is the first live stream I've made in the morning hours. In general, I make live streams at around 3:30 Pacific Standard Time every Tuesday. But today I want to share some big news happening right now. And Kevin, good to see you again. We just saw you yesterday. Hope you're doing awesome in Florida. Because there's some big news regarding the CPI numbers or the Consumer Price Index. These are inflation numbers on a consumer level, which is different compared to yesterday. We had the PPI or the Producer Price Index that was announced. So let me just kind of share my screen with you guys. And thank you everyone for joining me. I gave you guys late notice. I wanted to make today's video for you guys though, because I did not make a video yesterday, but I want to share this with you guys. And Cindy, thank you for joining us again. Good to see you yesterday as well. All right, let me share my screen with you guys really quickly. Excuse me. All right, awesome. Hope you guys can see this just fine. Actually, let me go back here. Sorry. Let me share my other screen here. My bad. And DG, good morning. Good afternoon to you. Awesome. You must be in the East Coast. Pros, cons, yeah. I'll get to questions in a bit. I want to talk about a lot of trends happening right now in Sacramento housing market. I, of course, have a lot to share regarding that. Let me share my screen. Hold on just 1 second. Okay, I hope you guys can see this. Excuse me. So this is from CNBC, just posted this morning. Treasury yields drop after cool monthly consumer inflation data. If you go to investing.com, just Google their economic calendar. Excuse me, I can't talk. My apologies. Of course, this happens during a live stream. Anyways, here is what happened right here. CPI. This is a consumer price index. Look at this. The month-to-month change. This is April compared to the previous month. It came in at a gain of 0.3%, in line with expectations, a gain of 0.3%, below levels compared to the previous month, though. Last month, it increased by 0.4%. On a year-over-year basis, it increased by 3.6%, in line with the expectation, but lower than March's reading at 3.8%. By the way, core CPI, excuse me, I don't know what's going on with my voice. Core CPI includes, or actually I should say excludes, volatile energy and gas prices. This is a closely watched metric that the Fed looks at. So the reading at 3.6% right now is actually the lowest reading going back to April of 2021, which is actually right there. Then it was at a gain of 3%. So inflation is cooling down compared to the past several months. And on top of that, we're seeing headline CPI also came in below expectations from the previous month, an increase of 0.3% compared to the previous reading, a gain of 0.4%. The year-over-year change headline increasing in line with expectations as well at 3.4%. Excuse me, I don't know what the heck is going on here. So there's that. I want to share this with you guys as well because, not that, the stock market is increasing big time as well. The Dow Jones up by nearly 300 points, S&P 500 a gain of 52 points, NASDAQ almost up by 190 points. Some pretty big changes here. Let me see if there's any questions real quick here. All right, let's go back to the questions. When the Fed says 2% inflation, do they mean 2 or 2.99% or 2.9%? Yeah, good question. Do they mean in the range of 2 to 2.9 or just 2% flat? I don't really know. I would imagine just 2% flat. Yeah, 2% over time. Exactly. All right. Let me share this to you guys as well. Working out the kinks here. Stay with me. I'll share my entire screen, be easier. Okay. So today, yeah, wow, look at this. So I woke up this morning around 6 o'clock. Let me just refresh this real quick. The yield on the 10-year Treasury note was down by about 6 basis points. Now it's down by nearly 11 basis points. It's now at 4.34%. Also, when looking at the Mortgage News Daily, let me just go back and hit refresh. So daily rates, according to the Mortgage News Daily, they look at daily rates for people with great credit. They basically survey a lot of lenders across the country and ask, what is your best rate for someone looking to buy their first house, their primary residence, and also putting down 25% down, and they have a FICO score of 780. So these are basically the average best rates in the US right now at 6.99%. That's a 12 basis point decrease compared to yesterday. 15-year is at 6.5, jumbo 7.3, FHA and VA loans is around 6.52 to 6.55%. Now, looking at this chart, this is for the average 30-year fix. This again is according to the Mortgage News Daily. I exclude Freddie Mac and the MBA. So I look at this right here. Rates right now at 6.99% has been coming down from just about a week ago. We were at 7.2%. 1 year ago, the average was at 6.7%. So rates have decreased by about 32 basis points from 1 year ago. Also, they have been coming down all month as well. We started in April 30th at 7.5%. Now we're down to below 7%. So the rates right now at 6.99%. That's basically the lowest rates we've had going back to, when was this? Approximately right about there. Basically March 28th this year. So rates have been coming down quite a bit over the past couple of weeks here. Also, according to the Investopedia.com, they actually look at a wider range of FICO scores in the range of 700 to 760, whereas the Mortgage News Daily looks at a higher FICO score of around 780. But according to them, as of today, you're looking at average rate at 7%. Pretty crazy. Also looking at our good Uncle Fred, the source here is Freddie Mac. Looking at monthly rates, rates were decreasing in November through January, but ever since then, rates have been more or less increasing. And we ended April at the average rate at 6.99%. But rates were increasing or have been decreasing really ever since then. Let me go back to see if there's any questions. All right. Good afternoon, Renee. And good morning for people on the West Coast. Crash incoming, Professor. Yeah. Same comment every video. I get it. It's all good. Robert Jones, thank you for joining us. No matter what pretty picture is painted, the national debt and personal debt is a ticking time bomb. Yeah, honestly, I am concerned about the national debt, but also, the credit card balances that we have in the U.S. right now, basically all-time record highs. Let me see if I can find that for you guys real quickly here, because this is something you guys should be aware of that he's pointing out. And let me get that. It wasn't something I was going to talk about in today's video, but probably something we should be talking about. So let me share my screen again. I'm new to this, so give me some time here. All right, here we go. Hope you guys can see this just fine. So this is our good Uncle Fred, and the source is the Fed. If we look at the 1-year chart, this is credit card balances nationwide. The most recent data we have is for March. Over $1.3 trillion of credit card debt. This is actually down. So is it down? It's basically flat from February. So basically the same amount of credit card debt on national level. When we zoom out, I think this goes back to the 1960s. Yeah, approximately 1968. You can see this giant run up of credit card debt ever since really the spring months of 2021. So at $1.3 trillion, this is way compared to pre-pandemic levels when we only had just over $1 trillion of credit card debt. So credit card balances basically going straight up ever since 2021. Yeah, so thank you for your comment on that. Yeah, I think that, and then delinquencies are also going up as well, which is a challenge as well. So we'll have to see what happens with the unemployment rate as well. All right, let's take a look at the chances for a Fed pivot. Some pretty big changes regarding that as well. All right. So here is that. Let me just refresh this because this changes pretty frequently. This is the CME Fed Watch tool. If you just Google that, this is a great tool to see the street's forecast for future changes by the Fed. And of course, the Fed controls the federal funds rate, which is the overnight rate or the short-term rate that banks charge each other to lend each other money due to reserve requirements. So you put $100 in your bank account, your bank can lend out the vast majority of that money, but they have to keep a certain limit of cash on hand. And because of that, banks lend each other money on an overnight basis in order to meet those reserve requirements. That's a federal funds rate, which does have a indirect relationship to mortgage rates. So when the federal funds rate increases in general, so do mortgage rates. So the next meeting by the Fed is in 28 days from today, which is on May 15th. The next meeting is scheduled for June 12th this year. So let's just go down here. I can kind of explain how you look at this. So the current rate, again, the federal funds rate is at 5.50%. So there's a 91.5% chance that the Fed's not going to do anything. It's going to pause again in their next meeting in about 1 month. This is much different compared to 1 month ago, because look at this. 1 month ago, there was a 78% chance we're going to be at the same rate, but a 20.7% chance we're going to be we're going to decrease rates down to 5.25%. And now that probability is at 8.5%. So a much higher probability that the Fed was going to start cutting rates in their June meeting. Now it's virtually non-existent at 8.5%. And also there's let me just actually look at the next meeting as well. The next meeting is scheduled for July 31st. Is also a very high probability as well, a 65% chance we're going to be at the same rates we have today. So again, the Fed pausing. However, a 32% chance they're going to decrease rates by 25 basis points. 1 month ago, it was a 41% chance. Let's look at their next meeting after that, which, by the way, I don't believe the Fed's going to pivot in July's meeting, potentially in the fall months. But please make a comment below with your thoughts regarding that. In their next meeting after that, scheduled for September, there's a 52% chance they're going to decrease rates by 25 basis points down to 5.25%, and then a 20% chance for 2 rate hikes down to 5%. I would be shocked to see that. Let's look at the end of the year in December 18th. So there's only a 6% chance we're going to be at the same rates we have today. A 25% probability we're going to be at 25 basis points less at 5.25%. but at 38%, they're believing we're going to see 2 rate cuts down to 5%. And by the way, no probabilities here for a Fed rate increase. So overall, the street is at least forecasting for potentially 2 rate cuts by the end of this year. All right, let's see if there's anyone else have any questions. If you guys do have any questions, just put question, and I'll do my best to answer all of your questions. Let's see here. Renee, good to see you here. I was looking at data and average residential homes sold between 2005 through 2024 were roughly 5 million houses. The two anomalies were 2005 through 2008 and 21 through 23. Yeah, last year we had, what was it? Just under 4.1 million existing home sales. That was the lowest number we've had in about 20 plus years. I believe the lowest amount of closed home sales since 1995. So a low level of transactions right now. And Renee, yeah, thank you very much. Appreciate it. A realtor named House, Adam House. That's awesome. I like your tag there. Howdy. How do you do, sir? Thank you for joining us. All right, let's have a look at what I want to share with you guys. The stock market, we talked about that. I also want to provide this as well. Let me share my screen again. I'm curious if you guys follow GameStop. Some pretty wild things happening there. So GameStop actually decreasing by 30% today. But 5 days ago, compared to 5 days ago, it has surged by 113%. AMC is down by 24% today. But over the past 2 days, the previous 2 days, GameStop was rising by about 75% for each of those 2 days. AMC has increased by 71% from 5 days ago. And the reason for that is this right here. If you guys haven't seen this movie, fantastic movie. My wife really enjoyed it. It's called Dumb Money. It basically goes over Roaring Kitty's YouTube channel and the impacts regarding GameStop. And he posted this on May 12th. And it shows him that a person is leaning forward and has a game controller in his hands. And because he posted that, which by the way, this is on Twitter, it has 26 million views. And because of that, AMC stock and GameStop absolutely surged. Anyways, just want to share that because it's absolutely crazy how just sharing one image can vastly impact the stock market. Other thing I want to share in today's video, this is going to be kind of a general overview about what's happening right now in the housing market. This is from the MBA. April new home purchase applications surged by 22.1%. This is a common trend we're seeing because we're seeing a high level of applications to buy or applications for home loans to buy brand new houses compared to existing houses. So new home purchase applications surged by 22.1%, which is absolutely wild to see this. People flocking to new home construction because they can get a closing cost credit, they can get a lower mortgage rate, et cetera, and don't have to compete against multiple bidders for existing houses in some markets like Sacramento, for example. So according to them, applications increased by 22% year over year and have gained on an annual basis for 15 consecutive months. Absolutely wild to see that. In contrast, look at this. Applications overall for home loans, it says an increase, but this is based on refis plus purchase applications. So overall, applications increased by 0.5% from 1 week ago. And this, by the way, is for the week ended May 10th. Here's how I read this. The market composite index includes refis plus purchase applications. So overall, that did increase by 0.5%. But I look at the refi index, which is not seasonally adjusted, that increased by 5% compared to the previous week. And also it's 7% higher from 1 year ago. And that's one of the main reasons why overall applications increased by 0.5%. The seasonally adjusted purchase index, which is a leading indication of our US housing market, something I follow on a weekly basis, that actually decreased compared to 1 week ago, and it's down 14% year over year. I actually haven't read this yet, but the armchair of activity decreased to 7%. I think it's a 24-month high was around 12%, so we're below that at 7%. And also the share of applications for people doing a refi actually increased to 32% compared to the 30.6% compared to the previous week. Pretty wild to see that. Also looking at another leading indication of our US housing market, let me just refresh this, is showingtime.com. It's not a perfect measure of real estate showings across North America, but it is a great report I like to share because here's what I do. I exclude 2020 and I just zoom in. This is on showingtime.com/daily dash showing dash activity. Just Google showing time showing activity. So a big decrease. I actually haven't seen this until now. Look at that. The number of real estate showings across North America only increased by 5.2% compared to the first week this year. Last year, we were up by 20.7% compared to the start of last year. And also 2022, we're up by 9.4%. Big decrease over the past couple of days. And this, by the way, is as of the week ended May 13th, just a couple of days ago. Also, another leading indication of our housing market, just go to Google Trends, just Google Trends. You can search for any search term. I look for homes for sale. So what they basically provide here is the amount of people searching for that search term, again, homes for sale right now, which has basically been flat all year, which is right about there. The level of interest for people searching for homes for sale has been relatively flat all year, which is wild because we would think that during the spring home buying season, more people should be searching for houses for sale. So the index right now is at 68. 1 year ago, we're at 92. What is that? 68 and 92. 68 less 92 divided into 92 times 100 is a decrease of 26% in the level of interest over time over the past 12 months. The last time I made this video was a decrease of 22%. So it's down by 26% right now, which is pretty wild to see. All right, let me get back to your comments. And excuse me. So Sydney says, I'm guessing the Fed will cut in September. Yeah, it depends on what happens with incoming data, but I don't see the Fed pivoting anytime soon. They're not going to pivot when inflation is still relatively high. The last thing they want to do is to cut rates and to see inflation wind up further, and they have to backpedal and start decreasing rates again or start increasing rates again. Maureen, is it better to put a bigger down payment to get a lower mortgage rate? It depends on your financial situation. Obviously, if you put if you have a lower loan balance, your housing payment will be lower. But you have to weigh the opportunity cost as well, because you can put that money into a high yield savings account, earn 5%. But again, I know that rates right now are around 7%, so you'll still be losing money. But to answer your question, it's a personal decision there. Yeah, Crystal, thank you for joining us again. We saw you yesterday as well. Appreciate you joining us. Let's see if there's any other questions. So DG, it would be dangerous for rates to decrease before home prices have adjusted to become affordable for everyday Americans. Low rates for too long gave the illusion of affordability to many. Not only the illusion, but housing affordability did decrease when rates fell to 2.7 to around 3%. But then after that, of course, home prices absolutely skyrocketed, which made housing very unaffordable, especially when rates increased to around 7%. In when was that? Late 2022. So yeah, I mean, I understand where you're coming from because if rates were to start decreasing greatly, that would entice more people to buy houses, which in turn causes home prices to rise, which again makes housing even less affordable than it is right now. All right. Tyler Houston, a question. Is there a way to track what prices of new builds sold for when subtracting out incentives? Yeah, I really wish we had public data on this because when looking at data from the US Census Bureau, they look at houses that are under contract with a home buyer. So they look at sales and also the home price based on not when house actually the sale is finalized, but when the home buyer got their offer accepted from the home builder. But what's not disclosed are those incentives that the home builder gave the home buyer. So if a house sells for, let's just say $400,000 yesterday versus 1 month ago, 6 months ago, 8 months ago, it's anyone's guess whether the home buyer got a much lower 30-year fixed rate, whether they got a $10,000 closing cost credit, a $20,000 credit, or a $5,000 credit, or if they gave them free builder upgrades such as free refrigerator, washer, and dryer. But really good question. That makes it really challenging to compare previous data because when looking at sales, home prices for brand new builds, we don't know exactly what incentives were offered to those home buyers. Renee has the question. Have you personally seen the impact of new commission laws regarding the sale of a home? And will we see a benefit to the sale to the seller or buyer? I personally have not seen any changes as of yet. I think there's a added level of transparency. But this, you're referring to the National Association of Realtors settlement that was announced, a couple months ago. It's not going to be enacted until mid-July this year. And the changes really are as a listing agent. So I'm listing a house today in Natomas in Sacramento area. On the MLS in our area, Sacramento, I can put there what is the commission that's being offered from my home seller to the home buyer's broker. And that field on the MLS is going to be gone. So the listing agent or the seller's agent is not going to be able to put that percentage on the MLS. And on top of that, when working with home buyers, you're going to have to sign a broker agreement with the buyers or with the agent prior to showing any houses as well. It's probably going to vary by the area, but in Sacramento, I personally have not seen any changes regarding that. I can go right now onto my local MLS and I can see all the commissions that are being offered to the buyer's agent's broker. I haven't seen a whole lot of changes regarding any significant decreases in that rate. So hope that answers your question. Haven't seen anything. Any other agents in watching today's video, let me know if you guys see anything regarding that. Max has a good question. Do you think home prices could fall if mortgage rates drop to around 5%? Do you think home prices could fall if rates drop to around 5%? Do you think this could unlock supply while still, do you think this could unlock supply while still not having the buyer demand? In my personal opinion, if rates were to decrease to around 5%, I think home buyers are going to flood the housing market. It's going to be a very, very competitive market if that were to happen. Because just think about this. Average rates right now, 7%. If rates were to decrease to 5%, that means your purchasing power as a buyer just increased by 20%. So more or less you can afford to buy more or less you could afford to have a housing payment or a loan balance of around 20% higher than today. Personally, I get a lot of people who reach out to me, who find me through YouTube, want to buy a house in Sacramento area. But I'm seeing a lot of people as well waiting for prices and or rates to decrease. But in my personal opinion, if rates were to decrease greatly, I would imagine we're going to see a huge influx of demand. On the supply side, we also could see more people opting to sell their houses. So a lot of people have rates below 4%, below 3%, such as myself. And if rates were to fall to around 5%, perhaps we'll see more people getting off the sidelines and listing their houses for sale. But in general, home sellers are often home buyers as well. So in my opinion, if rates were to decrease by 5%, there's a slim to none chance that home prices will decrease. In my opinion, rates will actually, or not rates, home prices will actually increase. Let me know what you guys think about that. Derek, thank you for joining us. Can we track how many people are paying in interest? Credit card balances are higher, but so are interest rates. I'm sure there's some website out there. I have seen websites in the past showing how, what is the APR that credit card balances are charging. But yeah, I don't know. I can't recall what that website is. I'm sure there's probably multiple websites regarding that. Sorry, I can't give you much more details regarding that. Lockup, good to see you here. Thank you for joining us. Let me see if I missed any questions here. Looks like I did not. Okay, so I want to share. Let's talk about some other trends from altosresearch.com. And I'm going to be making this video for about 10 more minutes here. I'm going to be hopping off here about 10:45 a.m. So I want to share this with you guys. All right, perfect. Let me just take my self out of here. Can I do that? No, because I can't. Okay, here we go. All right, cool. So altosresearch.com, fantastic website if you guys want to look at housing market trends on a national level. So let's look at the share of, actually, let's look at asking prices first. This is a leading indication of future closed home sales, right? So asking prices overall nationwide for the week ended May 10th is at $450,000. This, by the way, is for existing houses. 1 year ago, also around 450. So asking prices relatively flat over the past 1 month. Or I should say 1 year, I should say. But at 450,000, this is higher compared to 2 years ago at 443,000. And of course, way higher compared to 2019 at only $340,000. Let's look at days in the market. Again, a lagging indicator. Days in the market. So on average, days in the market's at 49 days. So it takes approximately 49 days to get an offer accepted. You list your house for sale, then 49 days later, on average, nationwide, you accept an offer from home buyer. That is higher compared to last year at 42 days, also at 49 days. This is the highest levels for the same time frame going back to May 2020. Back then, days in the market was at 70 days. Based on my personal experience in Sacramento, if a house is priced right, it doesn't need a whole lot of work, then I've seen houses selling for multiple offers that are selling for less than 7 days. These are houses for over $1 million and also houses for less than $500,000. So every housing market is different, right? Also regarding the share of price drops, which is right here, the share of price drops is at 33.7%. It has been increasing ever since really March this year, which is a seasonal increase. But at 34%, this is higher compared to last year at about 30%, 2022, 21, and 2020. Also at basically 34% right now. This is higher compared to pre-pandemic levels. Back in May 24th, 2019, we're at 31%. So what's different, what's happening right now compared to what happened in 2022 is that, and this is kind of the same thing regarding mortgage rates as well. The share of price drops is at relatively high levels right now, which is much different compared to the trough back in March of 2022, because back then we had, very close to multi-year lows regarding the share price drops, but then the share absolutely skyrocketed through November. So it went from what, 17% to 43%. This year, it's not skyrocketing like it did in 2022, but the share of price reductions is still very much elevated. And let's really quickly talk about inventory, and we'll kind of wrap up today's video. And we'll talk about another report that's going to be announced on Thursday, which I'll make a video regarding that as well. So here's inventory levels. So right now there's around 569,000 existing houses for sale. This is a 3-year high during the same time frame. 569,000 compared to the 313,000 in 2022, 313,000 as well in 2021, and also 722,000 in 2020, and also at basically 569,000. This is still way below 2019's levels. So inventory is increasing at a pretty fast clip over the past couple of weeks, and I'll definitely keep you posted with the latest developments on that. Let me just share this with you guys as well, and we'll kind of wrap up today's video. And of course, if you guys have any questions, please put question, and then I'll do my best to. I'll answer your question. Let's just say that. What was I want to show you guys? There we go. All right, so looking forward this week, there isn't a whole lot of reports that are going to be announced that are important that could impact our housing market. But one I do want to share is this right here. So Thursday, which is tomorrow, May 16th, building permits will be announced. So that's housing starts, and also building permits will be announced from the U.S. Census Bureau. I'll make a video regarding that. And just like every week, we have jobless claims that will also be announced as well. And something I noticed as well this morning is that the ads that are shown on the right side of my screen here are from newhomesource.com. It's just kind of funny. I mean, back in 2022, 21, and 2020, I didn't see any ads for new houses for sale. And now I'm seeing ads on my screen just then. Pretty funny. All right, let me see if there's anyone has any questions, and we'll kind of wrap up today's video. So key user, in my opinion, home prices will skyrocket. In my opinion, home prices will skyrocket if rates come down. So people still hoping rates drop, you're screwed either way. I mean, that is a valid comment here, because I also believe that if rates were to decrease big time, we're going to see all these buyers that are that have been on the sidelines, and they're going to flood the housing market, causing home prices to increase further. So, that's the challenge if you guys wait to buy a house, is that if you're waiting for rates to decrease, of course, that makes your housing payment more affordable. But in contrast, when rates decrease in general, home prices could increase as well. And also you could see bidding wars coming back as well. So yeah, I would say my advice for you guys, buy when it's right for you. So DG, I agree, Jason. Lower rates will entice buyers, increasing competition and skyrocketing prices. That's my opinion. DG, agree as well. Ben, a good job. Always top information. Thank you, Jason. Well, thank you for joining, Ben. Appreciate you. Good morning, Jason. Good morning. Thank you for joining us. It's not saying there. Question mark. MVD reports. Good to see you again. We saw you yesterday. So a question, mortgage rates decrease would accelerate. I'm not sure if I understand the question. Or maybe your question here. Mortgage rates decreasing would accelerate prices, which puts pressure on wages. Is there any way to get balance without millions of houses just becoming available? A balanced housing market, I imagine you're meaning? Yeah, so I guess like the challenge there is that, yeah, if prices were to increase, let's just kind of walk this through. If rates were to fall and home prices were to increase, we could get in a scenario in which housing is actually less affordable today, or less affordable then compared to today. So even when rates decrease, housing gets more affordable, but if prices rise, it could get actually less affordable. So in my opinion, the best way to get our housing market to be more affordable is to build more houses, also to see more houses being listed for sale. In my opinion, that's the best way to see a more balanced housing market. Is there any way to get balance without millions of houses just becoming available? I don't think we need millions of houses for sale. I mean, just look at Altos. We have less than 600,000 houses for sale compared to around 1 million houses compared to pre-pandemic levels. So yeah, I don't think we need millions of houses being listed for sale, but we need to see a sharp rise of inventory like we saw in 2018, or to see a sustained high level of inventory levels, in my opinion. And thank you, Renee, for joining us or joining. I say us. I'm so used to doing this live stream with Jim. And then Bilicon News. What do you think of the Orange County, California housing market? Do you think home prices will ever drop? Yes, I do believe that prices will drop at some point in time, but anyone's guess when will happen. I'm not too familiar with the Orange County housing market, but that is the most expensive market that the California Association of Realtors tracks. And so I'll make a video regarding the California housing market. I believe the California Association of Realtors will post their latest data, I believe, next week. So just like I do every single month, I'll make a video regarding that, what's happening at the statewide level. And then my second video, like I do each and every month, I'll discuss what's happening at the countywide level as well. But as far as predictions regarding home prices, it really depends on the direction of rates, but also inventory levels as well. So I hope that answers your question in a roundabout way. It's really hard to guess what will happen here. All right, I don't see any other questions. I don't think I missed anyone. I certainly don't want to miss anyone's questions, but if you guys don't have any further questions, I appreciate you guys watching today's video. I made this live stream kind of like on a last minute whim, but I really wanted to share that news regarding rates decreasing to 6.99%. So please leave me a comment below what your thoughts regarding that. If rates were to decrease further, that could entice more people to buy houses. Yeah, you're very welcome. Sorry, I couldn't really answer your question very well. And then same for what about the San Joaquin Valley, the Central Valley? Are we getting any relief in home prices? Yeah, I don't know if I'm not too familiar with your market, just to be honest with you. I'm in the Sacramento market. But again, I'll make a video regarding the California housing market. I believe, let's just look at this. Let me just look at it real quickly here. I'll give you guys the actual date that they will announce this. But based on my experience with the California Association of Realtors, they say that, hey, we'll post this on a certain day, and then they're like a day or two late. So I'm guessing it's next week. Let me just look really quickly for you guys. So on their website right now, they're showing that we'll have, actually it's tomorrow. April existing home sales will be posted on May 16th. But if history repeats itself, they may not announce that until next week. They've been late the past couple of months. MVD reports. Thank you. Thank you for joining. Appreciate you. Yeah. Okay. All right. Awesome. Well, I'm going to wrap up today's video. Thank you everyone for watching today's video. Please like and subscribe. Also, if you guys are looking to buy or sell in the greater Sacramento area, please email me at jason@meetjasonwalter.com. We also cover the East Bay as well. My buyer's agent covers that area as well. So if you guys want any help regarding that, please email me. And of course, hope you guys have an awesome day, and we'll see you on the next video.